This is Scott Whitwam with your morning real estate investor update. And today's top story, home prices see gains in the second quarter. The National Association of Realtors reported that nearly 90% of the major U.S. cities and their surrounding areas experienced home price gains in the second quarter. For the investor and homeowners who will be selling retail, this is good news. For investors, this follows a continued trend that has led to higher wholesale real estate prices, cutting into fix and flip investors' margins. Buyers, however, are finding the dream of home ownership moving farther from them. This can be good news if you're in the multifamily or buy and hold vertical, as everyone has to have somewhere to live. And if it's not as an owner, then as a renter. The question is, will we have some dynamic changes by the end of Q3? Rates seem to be moving in the favor of buyers, and we have a presidential election on the horizon. There have already been positive moves in refinances, buyer activity, which can be a good indicator of improvements in our industry. Today's mortgage rate update. With the involvement of the Federal Reserve in setting base rates and not the free market, rates are more tied to policy ideals than market demands. Sometimes I think I'm listening to a totally different Fed conference or reading a different meeting summary than what gets reported in the news. But it seems the current consensus is that September will see the Fed reduce the base rate as much as a half a point but maybe by at least a quarter point. I think I've heard this record before, last December, and it never happened. But if it does happen, it may still not move mortgage rates much since the two rates operate independent of each other. And some of the hopeful expectations may be the reason for the rate drops we have experienced in the last 2 weeks. According to Bankrate and Freddie Mac, rates are holding steady this week, with the rate on a 30-year fixed mortgage coming in at 6.47%. In today's wrap-up, layoffs in bulk, retail closings en masse, inflation still high. Cisco Systems, Intel, Paramount, Big Lots, Rite Aid. Okay, the list is too long to continue. I just heard on CNN that the economy is strong and there are good economics at play. If these kinds of good economics continue, we very well may see stocks and real estate crash, not unlike 2008. However, I think inflation has added some dynamics that we didn't have in 2008. And government has shown that they are willing to print more money to keep major crashes from happening. However, I think there may continue to be more investor opportunities to buy properties at a discount, especially if the current policies continue. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.